So people deposit their money in FTX because they want to trade, like any brokerage firm. It would be the equivalent of like you going to JP Morgan, right? To Chase, right? And you deposit your money in your Chase bank account, and then you find out that actually Jamie Dimon has been taking your money personally and going to Las Vegas and gambling on the weekends because, your money, his money, what's the difference? So that's what was really happening. He was just using all of these funds.
Okay. The FTX bankruptcy continues to crash Bitcoin, with Bitcoin dropping below 15,800 just this morning for the first time in 2 years. And while we'll finish this Jordan Belfort clip in a second, it is nice to see that as Bitcoin's dropping, Bitcoin address activity spiked to its highest level in over 6 months, meaning that there's more evidence of crowd capitulation. Here is that chart. The green line is Bitcoin's price, continues to trend lower, as 1.1 million unique Bitcoin addresses interacted on the network, the highest amount since May 5th. This means that people are taking their Bitcoin off of exchanges, putting it in cold storage to store, due to fear in exchange liquidity. Now, what does this mean for you and me as investors? Well, the BTC drop below 15,800 has caused many traders to finally exit the sector or liquidate assets. In fact, Bitcoin is seeing the lowest level of transactions made while in profit since November 2019. Bounces typically occur when this metric is severely negative. So essentially what this means is weak hands are selling. Bitcoin traders are overwhelmingly moving coins at a loss. And like I said, this is the lowest amount of BTC transactions in profit since November 2019. What this means to me is the more weak hands that capitulate leave the market, the less weak hands we have left, and the closer we may be to forming a bottom. Now, FTX says it owes over $3 billion to its 50 largest creditors, and although names are redacted, a court filing has revealed more of the magnitude of the collapse of the exchange. Jordan Belfort, obviously very familiar with something like this, and in fact to him, it was so obvious.
FTX was formed to fund Alameda, and they were terrible traders, and I watched some interviews. It's shocking. Here's what's also shocking. So like Sequoia, nothing against Sequoia, but to say that they did their due diligence, so nothing, really? They should hire me to do due diligence. I mean, you could see through this thing. Anyone that went down there and kicked the tires and saw this group of kids sitting around in one penthouse somewhere, all having sex with each other, just speak to them. It's plainly obvious that they knew very little about what they were doing. They were in so far over their heads, and everyone's just giving them their money, giving them more money, and it's always obvious in retrospect. This one, I believe, if anyone really looked closely, they would have seen it easily.
Now, with Celsius, if you use the platform, it appears there is a way to get your money back. As opposed to FTX, unfortunately, there's almost no money left. FTX owes its largest creditor just over $276 million, and its 50th largest creditor around $21 million. However, this could just be scratching the surface, as the company explained last week that it could have more than 1 million different creditors. They actually don't know exactly who or what they owe money to, because as the motion mentioned, FTX did not keep track of customer information in a way that made assessing who was owed what entirely clear. This we discussed in a prior video. What has just come to light today is that Genesis is potentially the third largest creditor FTX has. The third largest unnamed creditor is listed in the filing as being owed $174 million, while unconfirmed, the figure aligns to what cryptocurrency lender Genesis disclosed 10 days ago, that it had $175 million of funds locked in its FTX trading account. The crypto market is sort of in a waiting game to see what one of the biggest OTC desks for crypto in existence is going to do next. If they are able to raise this money from other sources, then all good, it'll be fine. They'll take a hit, but the market probably be fine. If Genesis files for bankruptcy due to this, though, that could potentially be the next leg down. For those of you wondering what Genesis crypto is, what happened to them, how they could potentially affect the market, seek this video out right here. The FTX collapse is about to get absurd. Great beginner's guide on what's happening to Genesis. Now, good news is, unlike FTX, Celsius filed for bankruptcy relatively earlier in the grand scheme of things, and they do have some money left. and Celsius customers have until January to file claims in their bankruptcy proceedings, specifically January 3rd, 2023. In a direct quote from Celsius, they said, "The bankruptcy court approved our motion to set the bar date, which is the deadline for all customers to file a claim. The bar date has been set for January 3rd. And according to Celsius, the firm's claim agent is going to notify customers regarding the bar date and their next steps via email or physical mail for those customers with an address on file. So make sure you claim if you use the platform. Hopefully something similar happens with Voyager customers. It does appear that Binance is set to relaunch a bid for bankrupt crypto lender Voyager. They were beat out by FTX back in the day. Everybody said 6 months ago, wow, FTX paid the most to Voyager. They were the white knight. They pushed Binance out. We are waiting, we are watching to see if Binance then now comes back in. In yesterday's video, we did address the rumors regarding Grayscale. Are they insolvent? The GBTC that they hold because they were refusing to share their proof of reserves. They wouldn't provide proof. Well, this morning, Coinbase Custody, who holds their 635,000 Bitcoin on behalf of Grayscale, gave a public announcement, said that they do hold the coins. And this was a direct note from Coinbase Custody CEO Aaron Schnarch. On top of their over 600,000 Bitcoin they're holding for Grayscale, Coinbase Custody also holds over 3 million Ethereum for the Grayscale Ethereum Trust and 11.9 million Ethereum Classic on behalf of Grayscale's Ethereum Classic Trust. And unfortunately, in the bear market, the GBTC premium, or in this case discount, continues to slip lower. The Grayscale Bitcoin Trust discount approaching 50%. It will be interesting to see how the market will trade and price this going forward. I bought some at a 35% discount, thinking the gap may close. I was wrong. So even though Grayscale says they do hold this Bitcoin, or at least Coinbase does, no big takers as of now. Huge discount on the price. Almost buy one Bitcoin, get a second Bitcoin free, almost where we are right now. But if you're asking the question for Grayscale, for Coinbase Custody, should we be worried that they're not showing their public Bitcoin wallets? Guys, I'll say it one more time. All Grayscale Trust assets are at Coinbase and untouchable. If they were touched, it would be fraud by Coinbase, Grayscale, and negligence by both companies' auditors. The assets are there. It's the rest of the trust structure that's broken. Essentially saying to not let that almost 50% discount fool you. Both of these companies have been audited by major firms. Now, popular decentralized exchange Uniswap just made the announcement they are now collecting certain data from their users. But first, just a reminder, my brother and I will be speaking at DecentralCon coming up later this month. Get your tickets, linked down below, if you'll be in Miami. Also, be sure to grab your tickets for Bitcoin 2023, the largest crypto conference in existence next year. Use code Altcoin Daily for 10% off. And finally, Altcoin Daily is very close to winning the Blockchain Influencer Awards. Please vote for us for Best News Source and Influencer of the Year. Link down below. Back to Uniswap. While they did just announce for transparency's sake, they are collecting certain user data, the popular decentralized exchange made it clear that it doesn't collect personal data like names or IP addresses. They said Monday in a blog post that transparency is key and that it collected certain off-chain and on-chain data to improve user experience. Now, the on-chain data, I have no problem with this. Anybody can see this on-chain data. That's the beauty of blockchain. The on-chain data that they're collecting is public information that occurs on the blockchain. This includes things like purchases, transactions, wallet transfers, and interactions with smart contracts. So that's fine. I get it. The off-chain data is external to a blockchain, such as users' device type, operating system, but can nevertheless be linked to a wallet and its activity, meaning what computer you're using, what browser you're using, they have access to this. And as they stated in this announcement, our first priority is to protect user data and privacy, but we do want to make data-driven decisions that improve user experiences. This is an ongoing story. And if you're interested in learning more about cryptocurrency, click subscribe. We drop one video per day, keeping you informed. Like always, see you tomorrow.